Hello students, welcome to CR Digital Classes. I'm Hashim Ali Khan. So this platform will give you a number of videos on different subjects so that you can get complete command on the subject, on the topic. So watch all the videos with full concentration, with full interest and enjoy the learning process. Now previous class I have explained one short problem on joint venture. Now in this class also, one more short problem I am going to explain which was asked previously in one of the examination for 4 marks. It's only regarding the journal entries to be passed in one of the co-ventures books. Now the problem goes like this. X and Y entered into a joint venture where in X purchases goods worth rupees 3 lakh and incurred 10,000 towards various expenses. So two transactions conducted by X and Y sold the goods for rupees 4,50,000 and took the remaining goods at 20,000. Now write the journal entries in the books of X. So we have to pass all these journal entries in the books of X. So journal entries in the books of X. The books of X. First of all, X purchased goods worth rupees 3 lakh. For what he has purchased? For joint venture he has purchased. So here we have to debit joint venture account and credit bank account because X is purchasing from his own pocket. Right? So first entry will be joint venture account debtor. Joint venture account debtor. How much worth of goods purchased? 3 lakh. Then bank to bank. To bank. $3 lakh. Narration you can write being the goods purchased for joint venture. Right? So this is the first transaction. The second transaction was incurred 10,000 rupees towards various expenses. Who has incurred this? X only. First he has purchased 3 lakh rupees and secondly he is meeting the expenses 10,000. So again same entry will be written. Joint venture account debtor to bank. How much amount he is paying? X is paying 10,000 rupees. Being the expenses paid. By whom? By X only. The entries are recorded in the books of X. Now third, Y sold goods for rupees 4,50,000. The other co-venturer is Y. He has sold the goods. X is not selling the goods. If X sells the goods, bank account debtor to joint venture. If X sells the goods, but here X is not selling. Y is selling. So Y account debtor to joint venture. Y's account debtor to joint venture account. Right? How much is the proceed? Sale proceed 4,50,000. That's all. So Y sold the goods for 4,50,000 and took over the remaining goods at 20,000. Some goods are there which has been taken over by Y. So same entry. Y's account debtor, because Y is taking over. Y's account debtor to joint venture. 2 joint venture. How much? 20,000 worth of goods are taken over by one. So what narration you will give for this one? Being the remaining goods of joint venture taken over by one. That's so these are the 4 entries to be passed in the books of X for these 4 transactions. That's all. So simple. So easily you can get 4 marks if you are perfect on the journal. Logically you think. So expenses are there, debit joint venture. When sale is there, credit joint venture. When stock is taken over, credit joint venture. That's all. So this is the end of this short question. Hope the concept is completely clear. I wish you all the best on behalf of SAQ Publications.